Good evening. This is the Elliott Wave Daily Update for the NASDAQ 100 and the S&P 500 for Thursday, June the 27th, 2024. Again, the market continues to basically consolidate and prepare for tomorrow's expiration, which is the end of the quarter. So what we've been seeing quite a bit this week is posturing or just position squaring for the end of the quarter. So it's end of the second quarter, and beginning on July the 12th, I believe it is, we start to get our second quarter earnings reports. And so the market is just getting ready to put out reports of like what they want to hold going into the second half or the third quarter, and then the fourth, so the second half of the year. And so again, we're seeing fairly decent moves initially this morning in Apple. We continue to see a battle basically going on in NVIDIA as to whether it's going to stay higher, lower, they're going to move it around. But today was in a much tighter range and still great volume, but not as heavy as we have seen. There have been just some standouts in terms of today. It was Meta's turn, and we saw Meta go pretty strong. We saw SMCI, which is in the NASDAQ and the S&P, really put in some strong numbers. And I'm not sure why this keeps changing. I keep moving it up so it's in the right place. And let me just bring up that too. Instead of saving it, it just kind of moves it back to where it was. Okay, so let me put that right there. Okay, so moving along. So I'm here on the 4-hour chart because I've made, again, I know everybody's like, oh, you're changing it every day, you're changing the label around, and there's so many opportunities, so many choices, etc. I am changing the labeling because what I find is when I get up to a certain point and I have to continue to break it down 1 degree, and I'm just too far down on a sub level, I take a step back and I'm like, okay, what do I need to rearrange? Because I just don't realize that even if I'm working on a 4-hour or 1-hour chart, to have that depth in terms of just sub levels on these like hourly charts. And so I rearranged, or I just changed it. It doesn't necessarily affect still what I'm looking for in terms of a continuation of this minute fifth wave, and within it, the minuet fifth wave moving higher. So what I did is eliminate the sub-minuet and the sub-minuet, which was really into play up in here. And so let me just, again, on the 4-hour chart, show that we have minute wave 4, which has actually been exactly where it is, and that is the April expiration. So April 19th low is where minute wave 5 began. And within minute wave 5, we again still have 1, 2, 3, maybe minute wave 4. If not, I'm going to go into the possibility that we still have a possibility of doing an additional leg down before we begin to rally back up. Now, I think that the probability of that starts to wane a little bit as we get ready for this end of the quarter. And that'll be tomorrow. So again, there might be some posturing right at the last moment. But I think the majority of it was done. And here in the NASDAQ, like yesterday, we saw when the market closed, the sellers came in and they pushed it down nearly 100 points. Well, today, it was the buyers. So you have to start to wonder, it's like, was it the same funds that did what they did yesterday? Today, they did what they needed to do, but just on the opposite side. And the market really went up about 80 points after the market closed and zipped straight back up, nonstop. And I was looking to see what the particular stocks and there really wasn't. That I was noticing, after hour, we get the extra hour after the close, the 4 o'clock close Eastern, that I didn't notice anything in particular that was really just kind of like being bought up. Nonetheless, it was bizarre to watch like it was yesterday. So I'm going to drop this down to the hourly chart. And so we're going to go internal now. And so again, the minuet wave 3 sits here instead of a sub minuet wave 3. So I've changed that internal on the sub minuet level. Sub minuet wave 5 is there. Minuet wave 3, minuet wave 4, possibly. And actually I will move it over to there because that's where that comes in right there. So possibly. So again, this now remains as 3, so it's still a 4, just a little bit of a degree higher. And now here's where we gotta just really take a look, because we have the possibility. Remember I said yesterday, well, that really is best viewed. And come on, computer. It just keep continuously. And I'm not sure why it is a communication between my mouse and whatever, but it just doesn't do it. So again, if I'm coming inside, so we're looking inside what could be just, if that's an A and that's a B, and then we're still going to do a C wave down. Now that begins to lose some steam, but what it can be is that we are in this minuet wave 5 going up, and it actually is going to be a diagonal. And it may even possibly be expanding versus just a straight wedging diagonal. So we have the two different. We have an expanding or the actual diagonal, which forms like a triangle going all the way up to the pinnacle. But still, we have that they are, 5, 3. They're 3 waves. All wave 1's 3, wave 2's 3, wave 3 would be 3. And what they should be able to count in an expanding is that the A and the C wave should be 5s. Here, it's always going to be like A, B, C, and that they are. It is a zigzag, so it is a zigzag. And this would be the zag, and now we're looking for it to come back up. So again, it tends to fit, because otherwise we're just really dealing with threes everywhere, and which leaves it in a corrective mode versus a finishing. So without a doubt, we need to leave open the potential that we walk in again tomorrow and they just take the market and go boom, and they bring it back down going below that low. Now, I'm not even going to add the leave on the chart, but I will show you that if we're looking at what possibly could still be left for that type of wave. And then we would go here. Nope. Let me see. I may do that one over. So we're looking for that last possibility of a leg down in a C wave. So we're going to go from there to there to there. And it would be pretty large, although, like 618, not the most common. The most common would be a C equals A. And that comes in at 19,471. So again, we had always left that open, that the possibility we could just do a quick drop down. And we had fibs that took us down to these levels. So the levels themselves aren't changing. So I'm just leaving open that potential that we could still do that. Now, the way that the market just took off in that extra hour that we get this afternoon, leaves in the position where it's like A, B, C, and then we could put a 3. And if that's the case, now, first of all, let me just say, if the 4 is going to extend and we're going to get a C wave down, our support is 19,718 and then 19,471. That's a 618 and the 1 and the equality. Those two would remain valid unless we were to break and to move additionally higher. So let's now show that one in terms of that we would have an ABC up. And we can do some inside calculations, and that's going to be there to there, and then what we're looking for is here, but more than likely all the way up into here, which is 20,346. And then we come up, and that's a wave 3, and then we come down in 3 into wave 4, and then we have a wave 5. So what do we have in terms of if indeed we're in that minuet wave 5? The equality is 20,408. not much different. If we go full bore, we actually do have that potential. But again, I think that the most common is 100%, and we were looking initially for a finishing move up to 20,408. We need to get above 20,371, which is the high for that wave 3. So putting in this wave 5 would definitely go there, and if we get 3, 4, and a 5, and it comes up into here, maybe plus or minus a little bit, then it would fit. So again, looking for, if indeed this is 1, 2, ABC 3, and then ABC 4, ABC 5, then we have here plus or minus a little bit. And again, once we get a continuation of this move, if this is indeed what's in force right now, then I would be looking for the 3, the 4, and the 5. And then we'll have the ability to put additional fib levels around it. And again, these are, once I do get, I likely can connect these. So let me just change this one. And actually, let me start it over. So if I remove it, and I'm going to put a new one in, because I can go here to here if indeed it's going to continue higher. And we're going to add that like this. And we'll go there. So a little bit not as expanding, but it still would be as it continues to move up. But the lower level becomes a little cleaner because we're connecting the levels as we should, wave 2. And then it would come up and go to wave 4 eventually. But right now we can run our channel line this way and the upper channel line this way. So that's if we are coming up in a diagonal, in a finishing diagonal fifth, expanding diagonal or just a straight diagonal, but still a fifth wave diagonal. And so what we're leaving open, again, what we're leaving open is the possibility this is A, this is B, and we come back down in a C wave. We have that 19,400 area, like right into here. That would be a good place to stop. But you can see again, it would be a hard drop. So, and whether part of it could start tomorrow, whether all of it could start tomorrow, a lot to be seen. We do have PCE, excuse me. We have PCE tomorrow. And we also have personal income and spending, PCE core, and Chicago Business Barometer and consumer sentiment. Those starting at 8:30 and running at 9:45 up to 10 a.m. We continue to get those numbers. So the biggest one that comes out tomorrow is PCE, which is one that the Fed does monitor fairly closely. So we're told by Chairman Powell. So moving averages, here we are looking at the 1 hour chart. Let me just kind of push this open a little bit more, or just close it up a little more so we can see the 200 is flat, the 50 rising slightly. We got the 20 and the 13 both rising along with the market, but they're all clustered together right in here. So again, not really jumping up and down, getting crazy. And so here they are still very nicely in alignment to continue to go higher. And you can kind of see the angle of where this could go there. All right, over in the S&P, we have kind of the same thing. A little adjustment does not necessarily change our upside levels, because we were always looking for a new high above 55.88, and we have 56.05. We were right into that area. That is 0.618, by the way, and that would be where minuet wave 5 would be 0.618 times the length of minuet wave 1, but we'd initially be looking for 100%, which is 56.65 into that area. So not that big of a difference between the two. And again, seeing how we may or may not come out of this end of quarter. Now, whether the market actually starts to tumble pretty immediately, rejects these levels, that can happen. But I'm thinking at this particular point, when we're going from end of the quarter and then right into second quarter earnings, that they may hold things up in anticipation of decent earnings, or just a continuation of these earnings. It's what the market has tended to do most recently. Now, I continue to look that once minuet wave 5 is complete and minute wave 5 is complete, it's going to complete that minor third wave. So I'm still anticipating at some point we're going to reach that high and we will drop down. Now, what can possibly start to do that? Well, we still have a lot of things. Of course, earnings, if they do not come out as I guess the street's expecting or as traders are expecting, then we'll start to see some things tumble back. We may see that correction start in some of the truly overbought, and actually we'll start to monitor other things, other factors. Something that I will be talking about on the weekly update is, again, the influence, and I know people are not really looking at this, but it truly does have a daily effect on how these indexes, how the ETFs, and how the individual stocks trade. And that is the option flows. There are so many options, and again, as I kept discussing because of the June 21st, well, now this one, the June 28th, not as large, but it's building. And where's it heavy? Very heavy on the call side. So it's not even weighing it out. So, and then when we take a look at volatility, volatility is not really, it slipped back under 14, but it's not really perking itself up. And so when you look at individual stocks, you're finding that the volatility is kind of pretty flat in terms of not spiking, and that these heavy call, the strikes where the calls are really heavy, it's kind of suggesting that, there's a lot of complacency. That's kind of my bottom line. We have this complacency. But as these numbers get factored in, and the flows, and whether, the heaviness of that, and what happens when all of this expires, and what it does, it release from the market, freeing the market to make some different types of moves. So we're seeing some of that happen in NVIDIA, where we are seeing a lot of posturing in terms of the expiration that's coming tomorrow, and how many of traders, institutions are bolstering or just kind of keeping a build on and a position in NVIDIA, because it continues to be an important company, an important product, an important member of the AI, et cetera, et cetera. And because of the buildup that we saw, running the stock up to 140, getting the upgrades that we saw from, and I saw them from 160 to 200, $160 to 200, lifting the estimates on where the stock could go. And of course, that kind of pulls things up. But when the stock gets a little bit too pushed, too overbought, a correction is going to happen. So we saw that, and we saw that there's still the possibility that NVIDIA, although it dropped down to upper levels of the 116 handle, the strike, it didn't drop all the way down, but it did get into that area. And now it's come back about the 126-ish, so it's picked up 10. And that's after it reached 140. So it got up to 140 and boom, dropped back down. So it already has corrected. Now it's coming back up. Don't forget that even if we're looking at an Elliott, even in the stock, that the correction's always going to be three waves. So it's going to be an A down, B up, and a C down. So we have that A wave done. We've got a C wave bounce. Then it may take us back up to 130. We could get up there, and that's going to be roughly, a 62% retracement of the decline. Right now, we're sitting just above almost that level. So it's almost a 62%, but we're above the 50% retracement back up. 116 coming back to 126. So it's all balancing out in terms of we may have that additional leg down, and that, in turn, will bring down our indexes as the options flows begin to turn again. And when we start to see, and we look at to see where the buildup is, and you see underneath the market, there just really isn't that buildup of calls. So traders aren't looking for that. Puts are calls, it just don't exist. It's like it's from these levels higher. Now, with that in mind, I will go into hopefully a little bit of a discussion about what essentially continues to be the underlying versus the derivative. Options have always been considered the derivative, but I have to tell you folks that truly they are the ones that are in control of where that stock is going to go. We may get the moves that they come in running into the stock because of an earnings report, or there'll be some news or an upgrade, et cetera. But it's truly being guided by the option flows, by the buying of calls, the selling of puts, the combination thereof, and what dealers in these stocks, the buyers and sellers of the options, providing those fills, they're having to turn around and hedge, and how those hedges get affected and how that all gets together. And so when we're looking at, say, for example, today, after the close, it's not just that they're just crazy about the NASDAQ. There has to be the individual components of the NASDAQ. And I think it had also to do with the options flows. And it could have been the options flows in the Qs, right? And the Qs are, they're based on the NASDAQ, on the NQ. So again, lots of stuff going on behind the curtain, so to speak. And I want to go into that because when I just find that we have a lot of, I have a lot of subscribers that are just saying, oh, come on, you keep changing the count, you keep changing that. And I'm like, well, it's not necessarily me, it's the way the market is trading. And I'm trying to guide this and figure out what's the pattern here. What are they attempting to do? So it's not like I don't know what I'm doing. I'm following it along. And now I've cleaned it up because I found that, to count the way I was dropping the degree, going down a lower degree and a lower degree. What I mean by that is like a sub and then a sub-sub. And so this keeps it on a more acceptable to me for how the move is going and what the anticipation is and how high these degrees can get. So I'll go into that hopefully a little bit more over the weekend. For right now, both the S&P and the NASDAQ, we need to allow for an additional drop down. So here in the S&P, I've included those levels, and they're right here. So if this all ends up being, this is an A and this is a B, and we still have one more leg down to do within this fourth wave, well, our first level is 54.70, 54.69, and then we have it all the way down to there. Now, what could drive it down there? Well, they could start selling it overnight, and then PCE comes out. Boom, we go there, done, and we start to rally because we have a big expiration again coming in. So a lot of things are going to happen, but I also believe that there's going to be, I believe it'll be the larger minor wave 4. Once it starts to kick in, I think it's going to be news generated. So we'll see. Anyway, this is where I'm going to leave this off for today. Tomorrow, we all know what numbers are coming out, economic numbers, and the fact that it is the quarterly and it's also quadruple expiration. So that means that we have equity options, futures options, treasury options, all the options, precious metals, a lot of things expiring for the end of the second quarter. And so the next Elliott Wave update will be on Monday, July the 1st. And I will attempt to get the podcast put together either Friday afternoon into the evening or Saturday.